What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is July 21st of 2022. Team, today we had our hands out, our palms out. We were selling into the strength. But let's take a look at the markets. We had the S&P 500. It finished up just over 1%. Very nice rally. NASDAQ QQQ finished up 1.44%. Our small caps were actually a laggard today. They finished up about 0.5%, as well as our dogs of the Dow. And then our ARK Innovation ETF was the big winner for today at 1.75%. And I actually closed out more of my ARK Innovation ETF position. Pretty much all of these indices closed towards the tippy top end of their day's ranges. We did have a volatility contraction today, and the market breadth overall was relatively strong. It was positive across the board, but you can see that this rally was actually pretty top heavy. The small caps only had 57% advancers, but the NASDAQ had 85% advancers, and our up volume was 60.7%. My trend model remains at a +3. Finviz heat map, take a look right here. We had Tesla rallying almost 10% after reporting earnings yesterday. And this really just goes to show how underinvested most players are in the market. Let's take a look at Tesla. Very nice reaction to the earnings print. Check this out. Tesla had been coiling for about 1, 2, 3 months. And then here we go. We were trading inside of this monthly value area, and boom, we had a gap higher, and the stock ran throughout the session. We do have this Venom R1 pivot here at 839.4. But yeah, overall, I mean, could this be like a bottoming setup? Yeah, it certainly could. Definitely worth watching Tesla in the days ahead to see how this performs. Because I must say, when Tesla's firing on all cylinders and the call buyers start coming in hot for that stock, it creates, a really good risk on environment. But let's jump back over here. We had energy stocks that were a bit weak for today's session. Let's go ahead and swap these out. Energy stocks were weak. Sectors, take a look here. We had biotech pulling back, and biotech was in our top momentum slot, and now it is actually moving towards the middle of our list. In our top momentum slot, we have fintech stocks, we have the ARK Innovation ETF, and we have the ARK Genomics ETF. So remember when everyone was saying, oh my gosh, Cathie Wood's going to blow up, she's done for? Well, now she's at the top of the list. Also, take a look. We are seeing some turnover in terms of this leader list. MSOS, the U.S. cannabis stocks. This is a group no one is talking about yet, and it is clearly moving up the ranks in addition to the home builders and our blockchain assets. So we're definitely seeing a pretty risk-on configuration here. Style factors, we had the growth style factor of 1.4%. That was likely led by Tesla, but we did have some strength across the board. Now let's take a look. We will go over to our indices, and let's take a look. Today I did do a whole lot of selling. Check this out. S&P 500 rallied up above this monthly value area high, which is great. We did have a morning pullback to this 5-day EMA, and remember, those retests of the 5-day EMA, they are super common even if you're in a very bullish tape. We also have this 50-day simple moving average below us. So remember, it's not like the market's going to move up in a straight line. Like, also, if we look at our NASDAQ, the NASDAQ over the past week or so, it's up 9.2%. Remember, 9.2%, that's over a year's worth of returns in 1 week. So what I find super funny, we talked about this earlier within our trading group, is most players a week ago probably had no exposure to the market. NASDAQ had a 9.2% run, which is fantastic. What are the odds that we're going to have another 9.2% run next week? They're probably pretty slim, right? That would be like uncanny, unheard of. And we do have the Fed meeting next week where they're probably going to raise interest rates 75 basis points. I would say the odds are another 9.2% rally over the next week is slim to none. But that said, most investors, they're more exposed to the market now than they were a week ago, which doesn't really make intuitive sense, does it? Not if you really want to be logical about, this trading sequence. NASDAQ is trading down in the after hours, down 0.73%, and it is likely due to Snapchat earnings. Now, Snapchat, do I even want to show you guys this? Don't know if I do, but here goes nothing. So Snapchat, this one was moving, and it was moving along with the Teslas of the world, all these growth stocks. Hey, maybe some of these names can bottom. We got a bad earnings report. I believe Snapchat said they're not going to be releasing guidance in the future. So it's kind of like the kiss of death for this name, down over 25% in the after hours. And I think that's rippling out to some other digital advertising stocks, social media stocks. So we'll have to see how the market reacts tomorrow. The other big tell, and this is another reason why I closed out a lot of exposure, this TDEX, which is the Scott Nation's tail index, this finished out the session up 17%. And this measures put options on the S&P 500 that are 3 standard deviations out of the money. And that was getting bid up throughout the day. So it really tells me, like, while the market was rallying very nicely, a lot of those shorts were probably getting barbecued. There were hedgers stepping in and they were taking the opportunity to go ahead and hedge their portfolios. So I had to ask myself, who do I want to be? Do I want to be the person buying more stocks into these overextended highs, or do I want to be a net seller? And I chose to sort of reset the portfolio and do some of that net selling. So let's dive into my trades for today. So trades, common stock, my PRVA. I sold the August 19th 40 strike calls against my common shares. And my common shares, I have a cost base of $29.15. I was able to knock that down to $27.70. Let's check out PRVA. Now this stock, again, you got to ask yourself, where am I buying? What does my trade location look like? Because this name, now it's overextended from the 5-day EMA. It's extended from the 20-day simple moving average. Could it go further? Absolutely. Yeah, it could continue to go. This stock has had a really nice run off the lows. Yeah, this stock has already doubled off the lows. So yeah, it could keep going. I hope it does, but I took the opportunity to sell the 40 strike calls, and I was able to take in some nice premium to do that. So yeah, my cost base now is 27 bucks and change. I believe I bought this stock, if I remember correctly, I may have bought it on this candle, I forget, or one of these back here. But yeah, this has been a nice winner for us, so I've just been holding on to it. All right, these are my options trades for today. So I did end up closing out all of my FXI January 20th of 2023 31 strike calls. Closed those out for $3.15. I had paid $2.53. This was a nice little base hit. Nice, but I'm reducing my long options exposure into strength. As the market has this, I don't want to call it a parabolic run, but this that we've had here is asymmetric. The fact that we got 9.2% on the NASDAQ in just a week, it's fantastic. I love that I was long options throughout that run, but I was warehousing a lot of risk in my portfolio. If you've been watching these videos for the past month or two, you know that we started to get really, really aggressive in the market in mid-May. And that was around when a lot of these growth stocks were bottoming. The real question is, how long do you want to keep warehousing a lot of that risk? So I took this opportunity to reduce my risk. I closed out another third of my ARK August 19th 44 strike calls for $6.45. I had paid $3.80, down to the remaining third of my position. I also have still my leaps on in ARK. So I was really heavily invested in ARK. I still have my position in it. Yeah, I figured it would be a shame if I just didn't take any of these profits into this strength. I'll take a look here as well. This was me closing out the other part of my FXI. I closed out my Funko November 18th 25 strike calls for $3.50. I paid $3.14. Again, another base hit, and I still really like this stock. Let's take a look at Funko. And then also at $3.34, I got long some VIX August 17th 23 strike calls for $3.45. I saw a headline pop up that the VIX had hit the lowest level since XYZ date. I believe it was like since April. So I figured, hey, why am I going to hedge when everyone's super worried and shorting into the lows and the market's slipping into the abyss? Why not hedge when everyone is suddenly like going risk on again? So I just took that opportunity. So Funko still looks great. Again, I closed out these call options, but does the stock look bad? No, this thing hasn't gone yet, and I really think it could still go. What I'm likely to do is, let's say tomorrow we retest this 20-day simple moving average or the 5-day EMA, which it's certainly possible because the indices, it's not like they're super strong. The after hours are a little bit soft. I would like to potentially add this via common stock rather than the options, because that's really the only way you can compound your account over time. If you just stay fully in all risk, you're leveraged up to your eyeballs, 100% long, and you stay that way, what's going to happen is every time the market goes up, you'll make a bunch of money. Every time it goes down, you'll just lose it all. So you really do have to, I guess, quote unquote, dismount from your really aggressive posture at certain points. So for me, it's not like, oh my gosh, I think the market's going to crash, now I'm turning bearish. But it's just, I want to put some money in my pocket. And now I'm down to about 65% invested, 35% cash. My exposures are mostly common stock. So I feel much more comfortable that way. And yeah, if we get some nice power earnings gap setups, I can jump into those. And I do have a bunch of names that are on my watch list as well. And then the VIX, check this out. So I might even monetize these tomorrow morning, who knows. But yeah, the VIX had hit the lowest level since April of this year. So yeah, I took that opportunity. Also want to bring up, we do have a Fed meeting that is coming up. And this is another reason why I wanted to reduce the options exposure. We've got some earnings coming up tomorrow. We have Twitter. That's going to be a big one for sure before the open. And then Fed Wednesday is coming up. So consider this. These Fed meetings, it's next Wednesday. Do most big fund managers, are they like adding a ton of exposure on Tuesday? No, not really. Most fund managers, they wait for the Fed meeting to pass and then they go ahead and make their decisions. Now, it's already Thursday. We're approaching Friday. So realistically, we have Friday, then we have Monday, and that's basically it. So like this huge rally that we just had, you know, again, are we going to get another 9.2% in the next 2 days ahead of the Fed meeting? Probably not. So that's why I'm kind of going back to like more of like a 70% pace in terms of my trading. I'm going to see if any opportunities arise, any pullbacks, any power earnings gap setups, that whole thing. Fed Wednesday, we do have a 72.1% chance of a 75 basis point rate hike and a 27.9% chance of a 100 basis point rate hike. So as of right now, it is looking like we're going to get the 75 basis points. Do I think it's going to be the end of the world when they announce what is already being priced in? No, not really. But I do think there could be some Johnny-come-latelys, that now all the hedges are gone. You know, ahead of the Fed meeting, they might go, okay, let's add some hedges on, you know, just in case. And that's really why I put on my VIX calls, just in case those Johnny-come-latelys come in and try to get themselves hedged. You know, I can take the hedge that I put on, I can sell it to someone else at a higher price, hopefully. And also the seasonality. Seasonality is fantastic for July, and we've taken advantage of that. We've been well prepared for this. But now we're approaching the end of the beautiful seasonality, and we get into the August seasonality, which is horrible. I always try to take vacations during the worst seasonality of the year. One of the worst is in winter time. Like this February seasonality is a killer in March. And then also I hate this August seasonality. It can be super choppy. So that was another reason. Reduce the options exposure. I don't have to worry about theta decay. I can still participate in the market. With that being said, that about does it for this market recap video. Hope you all had an amazing trading session. Hope you're able to, take advantage of this rally. And as always, I'll see you all tomorrow. Have a good evening, everyone. Thank you so much for watching these videos. Feel free to click the like button and support Pristine Capital.